Hi, good afternoon, everyone. I've got the pleasure to present to you Nomanini. Nomanini is a payment platform that has been built over the last few years to provide a solution that actually really focuses on solving the problems of merchants and for enabling merchants to become the agents for financial services providers. As most of you will be familiar with, the typical model in Africa is that mobile wallets are served through networks of agents, mostly for the mobile network operators. If we look at the future of financial services in Africa, we see a much more diverse landscape emerging, where banks that are not able to reach the unbanked right now will be able to reach them through those similar networks of agents. And the same will go for other financial services providers that will be emerging. It will not just be banks, it will not just be the telcos that are doing the mobile wallets. There will be a whole range of financial services providers, each of them looking to solve that last mile distribution problem. And that is exactly where the tools that Nomanini has built come into play. We provide transaction tools for merchants as agents, and it enables also not just those agents to become agents for banks and other financial service providers. Also, the networks of merchants and merchants aggregators can use this tool to actually manage the whole network of agents that they have. So, if you realize that 80% of retail in Africa is informal, it's also, you can imagine, quite an interesting opportunity to connect those merchants that are dominating that informal retail space to become agents of formal financial services. And that's the opportunity that Nomanini is focusing on, specifically looking at what those agents need and actually enabling them to also create some incremental income, creating more footfall for them as merchants, and also then enabling them to access financial services themselves, not just to be an agent for financial services for their customers, but also to access financial services, working capital loans, etc. How does Nomanini do that? It has built a platform that connects to hardware solutions. Nomanini started out with building its own hardware solutions, its own sort of Africa rugged point-of-sale devices, and has rolled them out in a number of countries in Africa. But with that, our realization came that actually being able to scale up faster by providing the digital solutions, the software solutions, the platform, that was a very unique. Whereas point-of-sales devices, we're seeing quite significant growth, but we expect that actually that market will be dominated by those players that are able to provide the cheapest solution, and we would expect that those would come from China and India, and that sort of homegrown devices will find it very difficult to compete in that market. And that's why we've chosen to really focus on the other part of our business that Nomanini has been building over the last few years, and that is actually creating the platforms for the networks of merchants to actually manage the transactions in the network and to manage the agents. In order to be able to do that, we've actually created a transaction platform that is very robust, enables sort of to monitor and manage activities of the network of agents real-time, online. It is enabling not just sort of networks of merchants, the merchant aggregators, but also the banks that work with those merchant aggregators to actually manage all of the transactions going through the system through a very robust platform that actually also is able to integrate with the backends of the banks and has sort of bank-grade reliability. So it is forming a bridge between the daily reality of the merchants across Africa and the back-end systems that they need to connect to when they become mobile money agents. When we talk about Africa, people have the tendency to talk about Africa as one country. Of course, that's not true at all, as we all know. What we also see is that the ability to provide these services and support these merchants will be different in different countries. As Nomanini, we have experience in 5 of those countries along that spectrum: in Ghana, Mozambique, Zambia, Kenya, and Namibia. And what we see is that in each of these markets, there's a need for cash in, cash out almost everywhere, but the need to do things like account opening, card acceptance, those things are different for different markets. And the kind of solutions that Nomanini has built are actually catering to all of those different markets, and also to the different types of merchants, because you've got the merchant who stands on a street corner, does quick sales of airtime top-ups, and you've got sort of the more established kiosks that actually have more infrastructure and ability to actually have more sophisticated infrastructure, and they would be, for instance, the agents that would be able to do account opening and do KYC, etc. And it's that entire range of merchants that the Nomanini solutions are able to serve. Where we stand now is we're running an application at scale in Mozambique with Mozabanco, coming from our experience in a number of countries across Africa in supporting those merchant aggregators and merchant networks. We are now ready to scale into other countries in Africa with the banking solutions and integrating banks and fast-moving consumer companies and their networks into these systems. Our ambition is to serve 100,000 merchants by 2020 across these different markets, bringing financial services to around 1 million people. That's it. Thank you very much.
Judges, questions? Yeah.
Hi, Vim.
Hi.
I was struggling to follow whether your strategy is still hardware-based and that the platform is what makes the hardware differentiated if it's not the cheapest.
Yeah.
And then also with that, how do you scale? How do you get these devices out to thousands of merchants?
We're hardware agnostic now, so we're still very much in love with the very first sort of devices that we built. And they're beautiful. They were very robust and very unique to Africa. But the scalability of a model where you need to get all of those devices in the hands of millions of merchants is really problematic across Africa. Especially because if you do a hardware play in these markets, you need to find also the counterparty who is able to invest in that kind of infrastructure. And for informal merchants, that is just a gap that is going to take too long to resolve. And with sort of the impatience that we have as Nomanini, we saw that just a hardware-driven strategy was going to go too slow, exactly because of that difficulty of reaching scale fast enough. Whereas there are a lot of devices out there already. And we're also continuing to work on hardware. So we're working with manufacturers to get sort of tailor-made solutions into the African market. But we are not driving the sales of that hardware. Hardware is going to be part of our package that we negotiate with the banks, but it will be sourced from wherever it can be sourced. And it will be tailor-made because you need different hardware for the different types of merchants. And so in a nutshell, our earlier model of hardware sort of driven sales, selling the hardware first, and then sort of the revenue model was that we were not making profit on the hardware, but actually the platform behind it was which is the software platform to manage the float and to manage the flow of transactions of digital products through from the source to the agents. That was where we were making our money. And that will continue to be so, but not dependent on which hardware is being used.
Who are your competitors, and what's your market share, and what differentiates you from the rest of the guys?
I'll start with the last one first. I think this market is virgin territory. So I don't think there's many people providing exactly these kind of solutions. There's a lot of different companies doing it from a different angle. And I think the three companies that are presenting here today are playing in the same space, but it's doing similar things from a different angle. And so the angle that we've chosen is very much the merchant. And focusing on what kind of tools the merchant needs. And our assumption is that the footfall and the traffic of the users and the use cases will be there from which will be a sort of a product push from the financial services providers, and a demand pull from the customers who need more cash in, cash out points. and you need to mobilize the agents to be those. So in terms of market share, I'm not sure what the size of the market is entirely in Africa for those kind of transactions. But one thing I do know is that it's going to be sort of tenfold that in the next 3 years. And in terms of our market share of that tenfold growth, I think we will be just one of the players. There will be many players doing these kind of things. I think what distinguishes us really is that we can work with the merchant aggregators. Those are the ones that are feeling the pain that they need to be able to offer a broader range of services to their merchants, and we are able to provide them the tools to do that.
Okay. And in terms of, the hardware rolling out, who bears the upfront costs?
The financial services provider who needs to provide the hardware to the agents for them to be the banking agents will be carrying that cost. We've got actually 2 business models that we're rolling out at the moment. One is where we are purely the technology provider, and one where we are a joint venture partner and where we share revenue, and that's when we also share the investment in the infrastructure.
Hey, Vim. Congrats on winning that fight with Vahid around the hardware. I'm sure there was a lot of heated board discussions. Just actually on the pivot now around the business, you were a brand previously, right? And now kind of when I look, I guess with Mozambique, I haven't got the... So your go-to market now is behind the brand of someone who's effectively responsible for rolling out. Is that correct?
Yes, but that's not different from what it was before. So if you look at the fleet of devices that are out there in Africa today still, it's more like an Intel kind of story. So it's Nominini inside, but you don't see it because the outside is branded by whatever sort of, for the airtime resellers, it was branded in the sort of in the color of whoever sort of was the airtime reseller. So some of it was branded by MNOs. In other countries, it was branded by the local sort of airtime distributor, like in Mozambique, the big airtime distributor there. That was our customer. So it is already. So it's not a consumer brand. It has never been a consumer brand.
But then, as you now, I guess, sit behind and effectively move on a B2B model and become a product partner, I guess, to these guys. How do you think about kind of defendability across these multiple countries, right? Because on the one side, when you're integrating into VAS and these type of services, the product suite at the bottom of the pyramid consumer is not, it's broad, but it's not infinite, right? It's just quite straightforward. And so, we see it quite frequently that, 2 years or 3 years with a partner, and then these people start thinking about bringing it in-house or go to retender and drive that. So, got an aspiration to go, however many, 30 countries. How do you think about the defendability of the model that you're not just, a development partner? Because, most places we've seen that doesn't really accrue long-term value. It's kind of becomes a little bit transactional.
No, there's a race to the bottom for the conventional SaaS models. And that's also why we're rolling out that partnership model. So we will deliver sort of software and the platform on a license fee basis. But actually our preferred and our focus on our route to market across Africa is the partnership model, where we have a long-term partnership with the financial services providers who have a clear need to service the mass markets, are not able to do that through their conventional branch infrastructure, and we can enable them to go the branches route, and that we do together. So it's not a short-term engagement, and this month it might be this platform, next month it's that platform. It's a combined effort, because actually the hardest part of succeeding in that market, and that's what we've seen with working with these merchants for many years, is actually creating sticky agents. And the churn of agents is one of the biggest problems in reaching those underserved. And if you can create sticky agents and a continuation and broadening the range of services to those agents, then you actually have a long-term model. And in order to do that, you need to have the tools, but also the way you need to know how to use those tools. And that's where our expertise comes in. So we form partnerships on a long-term basis, and that's how we secure that defendability.
Thanks.
Thank you. Give it up for Vim.
Thank you.